You're about to hear the story of a bank so powerful that when it collapsed, the entire world felt the shock. In September 2008, Lehman Brothers filed for bankruptcy. It wasn't just another company going out of business. It was the largest bankruptcy in U.S. history, and it helped trigger one of the worst financial crises the modern world had ever seen. Lehman Brothers had been around for more than 150 years. It started in 1850 as a small business founded by three brothers who sold goods and traded cotton in Alabama. Over time, the company grew into one of the most powerful investment banks in the world. By the early 2000s, Lehman Brothers was deeply involved in global finance, managing billions of dollars and advising major corporations. But behind the success, a dangerous problem was building. During the early 2000s, the United States housing market was booming. Banks were giving home loans to millions of people. Even people with very low income and poor credit were able to get mortgages. These were called subprime loans. At first, this seemed like a great business opportunity. Home prices kept rising, and banks believed the market would never slow down. Lehman Brothers saw a massive chance to make money. The bank began investing heavily in mortgage-backed securities. These were financial products created by bundling thousands of home loans together and selling them to investors. The idea sounded safe because the loans were spread across many homeowners. But in reality, many of these mortgages were extremely risky. Lehman didn't just buy these assets. The bank borrowed enormous amounts of money to buy even more of them. In finance, this is called leverage. By 2007, Lehman Brothers had borrowed more than $30 for every $1 it actually owned. That meant even a small drop in housing prices could cause massive losses. At first, nobody seemed worried. Housing prices had been rising for years, and banks believed the trend would continue. Investors kept buying mortgage securities, and companies like Lehman made huge profits. Executives received massive bonuses. The system looked strong from the outside. But the foundation was weak. In 2007, cracks began to appear in the housing market. Home prices stopped rising. Then they started falling. Suddenly, many homeowners couldn't afford their mortgages. Foreclosures increased, and the value of mortgage-backed securities started dropping fast. For banks like Lehman Brothers, this was a serious problem. The assets they believed were safe were now losing value every day. Investors began to panic. Large financial institutions started questioning how much these securities were really worth. Confidence in the banking system started fading. Throughout 2008, the situation became worse. Other financial companies were already collapsing. Bear Stearns, another major investment bank, was rescued earlier that year. The government and the Federal Reserve stepped in to prevent a complete disaster. But Lehman Brothers was in deeper trouble than most people realized. The bank was sitting on tens of billions of dollars in toxic mortgage assets. As losses increased, investors began losing trust in the company. Lehman's stock price started collapsing. In early 2007, the stock traded above $80. By September 2008, it had dropped to just a few dollars. The company desperately needed help. Executives tried to find a buyer who could rescue the bank. They approached several large financial institutions. One potential buyer was Barclays, a major British bank. Another was Bank of America. Negotiations happened quickly as the crisis grew more intense. But there was a major problem. Many of Lehman's assets were considered too risky. Potential buyers were worried that taking over the bank would bring massive hidden losses. They wanted government guarantees before agreeing to the deal. This is where the story took a dramatic turn. Earlier in the crisis, the US government had helped rescue other companies. Many people expected the same thing would happen again. But this time, government officials decided not to intervene. On September 15, 2008, Lehman Brothers officially filed for bankruptcy. The news shocked the financial world. Overnight, confidence in the global banking system collapsed. Investors realized that even one of the largest banks in the world was not safe. Stock markets around the planet began falling rapidly. Credit markets froze because banks stopped trusting each other. The collapse of Lehman Brothers sent waves through the entire global economy. Businesses struggled to get loans. Companies began cutting jobs. Consumers stopped spending. Within months, millions of people around the world lost their jobs as the global recession spread. Governments soon realized the crisis was becoming extremely dangerous. Central banks and governments launched massive rescue programs to stabilize the financial system. The United States introduced a $700 billion bailout program called TARP to help banks survive. Interest rates were cut, and emergency lending programs were created. Even with these actions, the damage had already spread across the world economy. Entire industries slowed down. Housing markets collapsed in many countries. Major companies struggled to survive. The crisis lasted for years, and its effects were felt across generations. Today, the collapse of Lehman Brothers is studied in business schools, financial institutions, and government agencies around the world. It became a powerful lesson about risk, leverage, and the danger of assuming that markets will rise forever. A bank that had survived wars, depressions, and more than a century of financial history disappeared in just a few days. Lehman Brothers believed the housing boom would never end. But when the market finally turned, the system built on risky debt collapsed faster than anyone expected. One company's bankruptcy didn't just destroy a bank. It helped trigger a global financial crisis that changed the world economy forever. If you enjoy learning the real stories behind the biggest business successes and failures, make sure you subscribe, because the next story might reveal another moment that quietly reshaped the world.